Carter, great to see you.
Good morning.
What do you see for the S&P charts at this point?
So, I mean, I think we're all obviously looking at the same thing, which is to say, do we or don't we make a new low? Do we undercut that mid-June low, June 16, June 17? And, you know, there's one way to try to figure it out, I think that perhaps is the best, and it's this. It's to look at other aggregates as well as constituents within the S&P and then make inferences, which is to say the semiconductor index, the Philadelphia, is below its June low. The KBW Bank Index is below. The Dow Jones Transportation Average is below. The Dow Jones Industrial is below. And then most of Europe. And so not only that, but major stocks within the S&P. So the thinking is that the S&P itself will, in fact, undercut the low. Then the question is, by how much? One thing we're looking at is the MSCI All Country World Index, which is about 45 trillion, 10 trillion more than the S&P in total market cap. It is now not only undercutting its June low, but it's back to its pre-COVID high, almost precisely. So it has given back all of the gains associated with the COVID recovery. Were the S&P simply to do that, we have an 8% drawdown from here. That would take us to 3,400. I think that's as reasonable a price objective or a level to consider as any.
3,400. Carter, I'm just wondering, because at one point we had a 50% retracement of our losses, and a lot was made out of that. And I'm wondering, is there anything, is there more damage associated or more lasting damage? Fine, we go to 3,400, but is it a more lasting sort of 3,400 level that we revisit here because of the progress that had been made, that had been given up?
Precisely that. It's, in fact, I think that's the single worst thing. And one could say why. We were able to recover. A lot of money was put into the market. It takes a lot of capital to move the S&P up 18, 19%, which is how much it moved from the June low to the August 16 high. And that capital then becomes an accelerant as that capital reverses. And it's like putting fuel on a fire. And so the bounce, in fact, nice as it was, it's actually the problem now. Or consider this, we're unchanged since June 15th. It's now basically October 1. So how can the market be oversold if it hasn't gone down since June 15th? Whereas oil is down 33% and copper is down some 20% since the middle of June. The market has yet to really have sort of the real beating that other aggregates have had since June.
And yet, even with this negative market view, Carter, you're relatively positive on the biggest of them all, and that would be Apple.
Right. So that's a conundrum. One could say, well, it's what will finally cause the big crack, that Apple ultimately gives way. But Apple, it might just be, it's so defensive, and that's crazy to say, because it's not a stable, it's not a utility, it's not a healthcare stock, a pharma. But if you looked at the action last week, two things I would cite. On Friday, of the S&P 100, the top 100 largest stocks, 2 were up, Pepsi and Lilly. And of the 98 that were down, Apple was down the least. Or consider the other number, that on a trailing 12-month basis, 25 stocks, which is a decent amount out of 100 in the OEX, are up. All of them are either healthcare or utilities or staples or energy. But one of them is not. It's Apple. Maybe Apple is a defensive play here.
Carter, thank you. Good to see you. Carter worth charting.
Shepard Smith here. Thanks for watching CNBC on YouTube.